there was a Wall Street Journal article this morning talking about the role of individual traders on helping kind of drive up this recent run-up in cryptocurrencies. What do you make of that? Is that a bullish sign for the crypto market as a whole?
Meanwhile, the SEC is warming up to a Bitcoin ETF, and the battle is well underway to see who will become the first money manager to get theirs out the door.
You know, Kelly, here's the problem. Everybody thought that Gary Gensler was going to be the golden boy for Bitcoin and Bitcoin ETFs. I mean, he taught crypto at MIT, therefore he gets it, right? Therefore he's going to approve of Bitcoin. Turns out, no. What Gensler has done is very clever and very intelligent.
From virtual tours to online mortgages, there's been plenty of tech and innovation in the housing market lately. Now you can add Bitcoin to the list. For the first time ever, some home buyers will have the option to pay for their mortgage with the coin.
I think these past couple of weeks, Leslie, have proven that crypto's here to stay. And it's very possible that a lot of these individual traders are getting into the action with the promise of more regulatory clarity as the days and weeks ahead. So definitely a very bullish sign.
First, he has said, I am in favor of financial innovation, and he's been very bullish on that. However, he's pointed out, I am now head of the SEC, which is in charge of protecting consumers. It was founded to do that, protect them from fraud and misrepresentation. And the crypto exchanges, there's been a lot of problems with that.
Hey, Kelly. So potentially as soon as Q3 of this year, you could be paying for your mortgage in Bitcoin and eventually in Ether. United Wholesale Mortgage said this week that it has plans to accept cryptocurrency for home loans. Now, the CEO made the announcement halfway through the company's earnings call, and he's billing it as a first for the mortgage industry here in the U.S. I spoke with the team there, and they say that they're thinking about starting with Bitcoin, but they're actively in the process of evaluating other digital currencies.
There was also, though, a CFTC report last week showing that institutional investors, leveraged traders, leveraged funds were net bearish on cryptocurrency, on Bitcoin specifically, the futures there. Does that concern you that, we may see kind of a divergence in the type of investor that's really playing crypto right now, that you've got these individual traders that do tend to be a little bit more, momentum driven, kind of piling in, while institutional investors who could be a little bit stickier are sitting this one out and betting against this space? Does that indicate more volatility and potential risk associated with this area?
So Gensler has come out very cleverly and said, yes, financial innovation. However, I have no control over the regulatory structure of these crypto exchanges. I need that. And he's basically gone to Congress and said, will you clarify this for me? Will you help me out, either with legislation or clarification or an understanding?
To put this into context, it's actually a pretty big deal. UWM is the nation's second biggest mortgage lender after Quicken. They had $59.2 billion in loan volume last quarter. But also really important to keep in mind here, this push into decentralized digital money comes at a time of heightened scrutiny of crypto from all sides in the U.S. We've got revamped crypto tax rules as part of the $1 trillion infrastructure bill, not to mention the fact that top financial authorities like Janet Yellen and Gary Gensler have recently been weighing in on the question of whether to regulate cryptocurrencies.
Now he's also gone a little further. He said and implied that he would look favorably upon a Bitcoin futures ETF. What's the difference? A Bitcoin futures ETF is not based on Bitcoin, it's based on Bitcoin futures. Yes, there is a relationship, but Bitcoin futures are a regulated market. Bitcoin and the way they would set it up in an ETF would imply that he would have to approve something that is actually traded in unregulated markets, and that's the distinction. So now everybody has said, oh my gosh, we're not going to apply for a Bitcoin ETF. We should be applying for a Bitcoin futures ETF. And they're all scrambling to do that. The problem, Kelly, is very simple. The Bitcoin community and the ETF community believe that futures are sort of an inferior product compared to owning the actual product itself. And it is because of the costs involved. But you do have significant roll costs associated with those futures contracts. And that's why the community doesn't like it. They saw what happened with the oil futures contracts last year, Kelly, and that had left a very bad taste in people's mouths.
It's a very interesting choice by the SEC here. Bob, we appreciate all your reporting on it. Thanks.